Hello, my name is Vladimir Tikhomirov. I'm Chief Economist at BCS Global Markets, and I'll give you my outlook in the macro area for the coming week. The past week has been framed largely, especially if we talk about the market developments, by a speech from Jerome Powell of the Fed. In mid last week, he spoke about Fed actions, basically insisting that the Fed is not prepared to take new steps to support the economy. He said that these steps should be taken by the government, and he ruled out a possibility of negative interest rates in the US. This news, along with his comments that the US economy remains in a difficult situation and is likely to continue to be in that state for a while, this news had led to some correction in the global markets, although over the weekend Powell again made another speech where he said that the Fed is prepared to assist the economy if needed, and they have a lot of levers still that they can use, along with the news that the House of Representatives from the US have passed a new package of aid to the economy totaling $3 trillion. So this news, the latest news, are likely to support the market sentiment this week, as opposed particularly what we saw at the end of last week. Also, which is positive for the Russian market and the Russian economy, is the news from the oil markets. We have seen continued rise in oil prices, driven by the cuts in oil production, as well as the news from China, which suggests that the Chinese industrial output is coming back. This is good news for all commodity markets, including the oil market. So as a result, we have seen a ruble strengthening to below 73 rubles to the dollar. We expect ruble to trade in the range of 72 to 74 dollars, 4 rubles to the dollar this week. Perhaps another interesting news related more to the Russian economy, where the releases of data from the central bank and the finance ministry late last week. The central bank reported the balance of payments data for April as well as for the 4 months of this year. This data has shown that Russia maintained double surpluses in its trade balance and in current accounts, although the volume of these surpluses has come down compared to March, which was quite expected. Nevertheless, the fact that the balances are still in the black is good news. Finance Ministry reported preliminary data for budget execution for the 4 months, which has shown, quite amazingly, that in April a Russian budget still had a surplus, although a very small one, 0.2% of GDP, but nevertheless still a surplus. This data contrasts with what we have seen happening in many other countries, particularly in the emerging market universe, where government finances came under very significant pressure in April. We have seen big deficits. We have seen a significant increase in debt. Russia has escaped that in April, but the two factors behind there were, first, on the spending side, the federal government was very conservative in its spending on the crisis, particularly in the initial phase in April, where they preferred to see the bulk of anti-crisis measures to be taken by the companies and local governments. And on the income side, on the revenue side of the budget, in April, we have seen, particularly in non-oil area, a lot of the tax collection still related back to March outputs. So it was not very representative of the crisis. I think that in May we are going to see significant change in the budget dynamic. We're going to see a deficit as federal government started to increase their spending on the economy, their aid packages. And on the revenue side, we are likely to see a significant deterioration in collection of non-oil revenues because in April we have seen a big drop in economic output in Russia. Nevertheless, I still maintain the view that Russian fiscal and balance of payments situation remains quite manageable. And I don't see why this situation should deteriorate greatly. Although Russia is going to post a budget deficit this year, I think that the most of this deficit will be covered by new public borrowing. So, to sum up, the coming week we're going to see sort of some positive developments on the markets driven by news from the Fed and the US government, which are preparing new package to support the economy, as well as from the oil markets, where we see oil stabilizing at levels above $30 per barrel, which is positive for the ruble and the Russian market. But for the rest, where we are going to watch the dynamic of pandemic, both in Russia and worldwide. There are some positive news showing that the restrictions are starting to be lifted in Europe, in other parts of the world, as well as in some regions of Russia. This is good, but we have to wait and see whether this translates into more stable increase in economic output in the coming month or so. That's all on my side. Thank you.